Good morning, students. Today we are going to discuss about the bank final accounts. Bank is very important aspect in the business and main functions of the bank, granting loans to the customers as well as deposits accepted from the customer. So these are the main functions of the banks. So there are some rules and regulation should be followed by the every bank to prepare the books of accounts of the bank. So what kind of rules and regulations are there are followed by the banks? Today we are going to discuss about that. There are two types through which we can maintain books of accounts. Horizontal format is there and vertical format is there. So in horizontal format, there are debit and credit. There are two sides are there, and in vertical format, we prepare different schedules, and on the basis of that schedules, we prepare balance sheet, profit and loss account, and we find out the trading results of the bank. So, friends, today we are going to discuss about the which accounts we are preparing in the banks. So, according to Banking Regulation Act of 1949, like Company Act 2013, there is an act for the banking regulations. We called it Banking Regulation Act 1949. So it deals with the preparation of the aspects of the banking business of the India, and in section 5b of the act define that bank. What do you mean by bank? So accepting for the purpose of lending or investment of the deposits of money from the public. So earlier we discussed about it. First function of the bank to accept deposit from the customers and granting loans to the business. So these are the main functions of the uh, banks. After other than they received money from the public, repayable on demand, other services also provided by the bank. So checks issued by the bank, draft and other services are provided. Then next point is that ledgers. So main types of deposits are fixed deposits are there. Fixed deposits means the deposit holders invest their money or deposited their cash into the bank for the particular period. Suppose 1 year, 5 year. So there is a fixed tenure of the deposits which are deposited by the investors or the customers of the bank into the bank in the fixed deposits account. Then current deposits are there, or we called it current accounts also. So who open the current account? The businessman generally open the current accounts. Why they open current accounts? Because there is no transaction limits. Any whatever the businessman or the trader want to deposit cash into the bank whenever he want, and whenever he want to withdraw the money from the bank. So there is no any limit for the transaction. For because of that, they are open current accounts into the banks. Then third, that is saving deposits are there. So saving deposit, there are some restrictions for the transactions. Generally, salaried persons open the saving accounts. So these are the all the types of the accounts. Then recurring deposits are there. So recurring deposit means a monthly fixed amount deposited by the uh, customers into the bank. We called it RD. In short form, we called it RD, recurring deposits. Then investment ledgers are there. Investment ledgers means when bank receive deposits from the customers, that money they invested into the different shares, debentures. So there is an investment of the bank, and bank get interest on that investment, because when depositor deposited money into the bank, they expect interest from the bank. So main purpose behind the investment to earn more income on the deposits which are deposited by the depositors into the bank. Then loans ledgers are there. Earlier we discussed about that the granting loans to the customers. This is the one of the objective or main function of the bank. So loan ledgers are there. We called it advances also. In advances, there are cash credit facilities are provided by the bank, as well as loans, long-term loans are provided by the bank to their customer. Short-term loans also provided, or we called it microfinance also provided by the banks to their customers. So all these uh, transactions or all these loans are recorded in the loans ledger, as well as cash is there, credit ledgers are there. So all these transactions we have to record into the bank final accounts, as well as bill discounted and purchase ledger also maintained by the bank. So bill discounted by the banks, this is one kind of the advances we consider into the advances. Then customers acceptance, endorsement and guarantee ledger. So these are the contingent liabilities of the bank, and we have to record it to the schedule number 12. So there are total 16 schedules are there, and this acceptance and endorsement we recorded to the schedule number 12. We cannot consider that schedule into the total of the bank, but we have to disclose that all the details to the schedule number 12. After that, in addition to the cash book, general ledger, bank institutions maintain chip registers, memorandum of books also they maintain. Different books are maintained by the bank. On the basis of that monetary or evidences, they prepare final accounts. Okay, so accounting relating to the slip system of the posting also we have to understand, because for the purpose of learning the final accounts of the bank. Then these are the different slips are using in the banks. So pay in slip, when we want to deposit cash into the bank, we are using that pay in slip. After that, withdrawal slips are there. When we want to withdraw money from the bank, that time we are using that withdrawal slips. After that, recurring deposit slips are there. Earlier we discussed about that recurring deposits. Monthly we fixed the amount deposited into bank. We called it recurring deposits. Basically, generally a salaried person open that recurring deposits into the bank, fixed amount every month set aside from their saving account, and it converted into the fixed deposit. So we called it recurring deposits also. Then current accounts are opened by the traders, then demand drafts, checks, etc. So these are the slips used by the banks for the transaction purpose. Okay, so these are the some information given about the uh, slips which are using in the banks. Then what are the advantages of the slip system of the posting? That bank saving lot of time. Okay, then clerical staff slips or other documentary evidence they are maintaining. But right now we are using online banking transactions, so all these slips are right now outdated. So but there is importance for every document in the bank. 16 schedules, out of that 5 schedules are related to the liabilities of the bank. So we are looking one by one. First, that is capital. This is first schedule. In capitals, there are 5 important types of the capital. First one, that is authorized share capital. After that, issued share capital is there, subscribed share capital, called up share capital, and after the called up share capital, we minus the call scenarios from the called up share capital, then we get paid up share capital. So when we are consider the capital of the bank, we considered only the paid up capital of the bank. So there are these, all these capitals are included into schedule number first. Second one, that is reserves and surplus. So in reserves and surplus, profit and other reserves of the bank we considered into the schedule number second. Then third, that is deposit. Already we discussed about that. Current deposits are there, saving deposits are there, fixed deposits are there, contingencies accounts are there. So number of deposits we have to record to the schedule number third. After that, fourth schedule is there, borrowing. Like other business, bank also required some fund from the other banks. So bank borrowed money from the other banks, we have to record into the borrowing schedule number fourth. After that, fifth schedule is there, other liability. So there are number of liabilities are there which company have to banks have to pay to their uh, customers. So all the liabilities are we have to record to the schedule number 5. So all these schedules are related to the liabilities of the bank, and remaining schedules are we have to record to the asset. And next part we are going to discuss in the next lecture. Thank you very much.